The second policy element that I'll mention is if you look at what drives price for customers, ultimately, it is collecting funds, dispersing funds, and it is still fairly expensive and or slow in the US context to be able to collect funds from customers. And so the good news is there are innovations like FedNow that are out there now, which would make it much less expensive. I mean, significantly less expensive, which could be passed along to customers. But unfortunately, the way the regulation is written is that outside of banks, you can't get direct access to FedNow, which is an outlier compared to a lot of other countries where highly regulated, I mentioned who are regulated, but highly regulated non-bank financial institutions have access to payment rails like FedNow. And so if, not just us obviously, but if global payments companies, remittance companies, however you cut it, have access to things like FedNow, it has a huge win in terms of bringing down the cost of remittances for customers. And I think the good news is a lot of folks are getting that now, and I think there's some momentum about that hopefully happening.